Good afternoon. Welcome to Options Tender. It is Tuesday, December 19th, 2023. Welcome, everybody. We're going to go through SPX, NDX on multiple time frames. And then when we get down to the daily, we're going to go through quite a few indicators so we can sort of show you what's happening. And then I'll go through my Elliott wave count. It really is the same. Even though NDX made a new high, all that did, and I'll explain a lot more later on, was that cleared up whether it was a 1-2 setup or an A-B going into C. So make sure you stick around for that. That's really, really important for the market structure and to see where we go from here. So if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. We have a lot of great information. We haven't been on here for a little bit because the market has been grinding up, but this is very important to watch through here because we're going to go down to the 65-minute, and I think we're getting our turn as of today into tomorrow. It's highly likely because I believe the structure is complete down on the lower time frame. So let's go ahead and don't forget to like the videos. That's the most important thing you can do for this channel is like the videos, and feel free to comment if you like. All right, here we go. We have SPX on the monthly time frame. We're going way back to the 1929 stock market crash, and we had a couple different touches here where 2022, the large dip that we had came into a confluence with a few channels. And the giant wedge that we're looking at way back to the 1930s, and the top of it touched here at 2000, the tech bubble as well. So we're really just looking for a large correction. Okay, I know this is a deep correction. We haven't made new highs. We don't need to. I'm looking at this. We'll look at it on the wave structure, but I'm looking at this being a corrective move, an A. We're looking for a wave B. And now I think we're going to get some sort of C just to start our correction. So we're going to look for a 5-wave impulse move down before we correct and have the rest of our moves. So I was looking for this to be more of a sharper move, as in an A, a smaller B, like a zigzag, A, B, C, to get our first move, or possibly a 1, 2, 3, 4, 5. Now, I don't think any of those scenarios can fit anymore. We made new highs on NDX, and so I think this is more of a flat pattern, possibly to start off our A. All right, so our C will have to be an impulse. Should be a pretty reckless move. The only thing I want to show you on let's go over to NDX. NDX, I just really want to show the situation we have here with our indicators. We have potential, and I say potential because it's not confirmed until we get a crossover. We have negative divergence here on the monthly time frame, making these new highs here. That's a big no-no. Can this still go higher? Yes, according to the indicators, but we are setting ourselves up for a lower high in all of these indicators: the slow stochastic, the RSI, and the MACD. And if you need to learn, if you're brand new here, you need to learn some of these indicators. I will tag them. I'll put them at the end of the video. A tutorial on the MACD along with the RSI. Now, we're going to move over to the weekly time frame. And since we're on the NASDAQ, we'll stick here for a second. Okay, and so when you have our potential first move here, you can count this as a 5-wave leading diagonal, or this could be an ABC, which is fine. Either way that you count it, We're looking for initial move down for an a B, which a B can exceed, can make new highs. So this is completely valid. We made new highs. We're getting all these divergences. It's very important. This move has been tremendous. It's been grinding up. It needed a destination. It needed to make all these divergences. So it will validate when we have a large move to the downside. It will validate how important this move was, this turn. It's taking so long. We had such a sharp move to create new divergences on the weekly, on the monthly, and now on the daily and 65-minute as well. So this is very important. We're very overbought in all indicators. We're forming divergences. Let's go back to SPX. We'll move it over to the weekly time frame. Okay, so I need to adjust this just a little bit more. What I'm trying to do with this channel is not predict anything. I just want to form a channel, so when I want to adjust this, so when we get our turn here, we can label where our possible target is. So if we get an ABC here, this will be the bottom of the channel. Perhaps that will be the end of our move. And then you have two options. You go to new highs, or you just make a lower high again. And that would be our ABC for a 1, or excuse me, ABC for a larger degree A, a pullback for B, maybe a nice large pullback, and then a larger degree C. All right, so this could, we'll be looking for a very large 1, 2, 3, 4, 5 heading down. I don't know how far that will be. We speculate that it will be a very, very deep move, that we hit a very high degree top here, and that we need to correct. And when I say these, I don't know if you, let me just be clear. Let me pull back to 3 years. Actually, let me pull the time frame so we can, let's go to the max. Okay, so we have this massive move. We, at minimum, need to correct that move, but what I think we're really correcting is this move back here to where we're making it, we're setting up a 1, 2, that this was a wave 4. I know this is a huge picture here. We're looking at the very big picture, that this is a wave 4, and we have our impulse wave 5 to complete a massive, massive correction, much, much lower, devastating, depression-like. I'm not in that camp. Really, I'm looking at this being a wave 4, and now a wave 1 to begin the next round of moves to the upside. So, but this is still a huge move that would correct all the way down to the Corona lows here, and the uptrend here should take a good amount of time to do that. But that will be devastating to the economy, unfortunately. But that's the kind of move I'm actually looking for. So an ABC into this channel, and then we'll be looking for a bounce, maybe even to the upper end of the channel again for a range, and then a breakdown from the channel. That's really what we're looking at in the big picture. Let's go ahead and move to SPX on the daily time frame. On the daily, trend is our friend. You see price action is it got past our next resistance. We're on top of that, and we're just poking above, testing all-time highs. We're right back at a minor resistance right now. Again, right around this 47.75 range. So right near all-time highs. That's very typical for a B wave. Test the highs and then start impulsively heading lower. So now we have to start focusing on this move itself. I do believe that this is a 1, 2, 3, 4, 5 wave impulse move to end our ABC correction for wave B. This became a very complex correction. We thought we were done here, but then we got into our buy zone that I put that months ago, or I don't even know if it's months now. This move was so fast, it's maybe a month or two, but got into our buy zone and also the point of control and started heading up. So this is where we're going to start concentrating on a little bit more of the indicators. So we have a couple that we can look at here. So let's go ahead and take off the traditional technical analysis. You see we're forming a wedge. That's a bearish rising wedge. There's another way you could draw it with the top here. We can look at that on SPY in just a little bit. But let's go to just a clear screen here so we can check out our reversal indicator. So we have the MACD looking to cross over. We got out of that bearish divergence. We burned through it. We're just in sky, in the sky with the move. So we're in overbought conditions. Same with the RSI. No divergence there. Can it come back down? Yes, we can somehow form a divergence, head to new highs. Again, we can have a pullback and then one more high to form a divergence on these. That's possible. I'm not looking for that to happen. If it does, that's fine. I'll have another objective short. So we're, again, and just super overbought. 96 right now. 96 on the RSI. That's incredible. Incredible move. All right, overbought on, and it looks like we have slight divergence on the Williams percent. So overbought in the RSI, divergence on Williams percent, that equals sell signal for us. Confirmation will be a drop underneath this 20, this negative 20 here. Okay, so we have our setup on this indicator. Looking at this awesome oscillator, bulls so far are in control. We had divergence that burned through. Bulls, as of right at this point, are in control. Again, we can pull back and then get a newer high with a lower high in this awesome oscillator. It's possible, but it doesn't have to. Like this point up here, it doesn't have to. We get to a point and then we start heading down. So we'll be looking for some red bars here. So far we don't have it, but clearly the candle is green as well. We don't have a reversal signal yet. Okay, and the DMARC sequence. We're at an 8 count, so that means tomorrow we'll be looking for the 9 count, 9 reversal setup. Excuse me. But on the NASDAQ, we do have that, and I'm not going to go through all the indicators on the NASDAQ as well. They pretty much mimic, and there goes my alarm. I have the alarm set for when I have a 9 count sequence happening. So the NASDAQ already has it. We have a 9, a 13, and a 9 set up here. So keep that in mind. The once again, our sell setup is here, and I do think we are at the end of this move. Now we need confirmation, and that's just, again, the slow stoke has some negative divergence on it on this time frame. RSI is completely oversold, and again, the MACD is sky high. Can it go higher? Yeah, but we're going to look for the cross here for confirmation. This moves, when it does turn, it's just going to be getting started. It's just insane amount of moves that we went to. Let me just pause here so we can get some more indicators. On this screen, we have the balance of power that we can look at. We did have divergence here, and again, the bulls are in control. So we have this nice large green candle. We'll see where that goes from here with all those divergences. The next candle should start being something that starts to wane. Maybe we get a new high somehow. I don't think that's probable, but if we do, then we'll be looking for divergence. And now we have our, I call it my dumb money indicators. We looked at this the other day. We're making higher highs in price, and we're making a lower high here today as of the last few days. So we're looking again for another signal that that this is not a valid move and that we should be reversing imminently. Now on this set here, we just have the options expected move. On this setup, we're not quite there. If we do not hit the top, if we are, it's a higher probability that we touch one of these sides. If we don't touch the top here, and both can happen, then I think by the end of the week, we may have some sort of catalyst that, and we'll talk about those in a little bit, that bring us down to the lower end of the options expected move. Right now, we're looking to reach the top. If we don't, we start reversing, we get the sell signals. Then look for that bottom lower expected move. Now with the other indicators, we can look at our Bollinger Bands. Bollinger Bands here, we're way exceeding out of there. We're pushing the bands to the upside. We're way overbought. When that happens, just like this move here, just pushing on the upper end. So we'll be looking for reversal. We got the reversal and had one more move up just underneath to touch it again, and then had our reversal. So, price action, again, pushing up, can reverse off of it and continue down, or can make one more high after it. Very similar with all these moves. They're so powerful. You get your reversal signal, and you can have one more push to the upside before heading lower. So we're at the up there. This is not the time to be bullish. How about that? There's a lesson right there. The Keltner channels, same thing. We usually stay pretty well in between. We're riding the top on the powerful moves. So you can see we're stretched, enormously stretched. Came back to test. We stretched it really, really hard on this move, this massive move. Came back to test it, did it again, and now I think we're getting near that point to where we're just 2 standard deviations outside of the Keltner channel. We need to have, at minimum, a pause, a retracement, but I think this will be the end of our move before heading much lower. Now, on this set of indicators, we have our McClellan oscillator. As we make higher highs, the breadth of the market is not showing the same thing. We're getting multiple bearish divergence, negative divergences. This is getting tight in price action, and I think this will resolve here pretty soon. Now, the summation index is just showing how powerful this move is. We're near some tops, so we're pretty stretched out here at this 3,300 area. Pretty level with the last top that we had, and it's a possible site to where we could start getting extreme bullish, to where we can think contrarian and start heading to the downside. We already looked at the balance of power. We have our advanced decline line here. We made new highs on the last high here, and we are making a lower high at this point with this push up here. So that's our divergence. Same thing happened back at the top last time. Now in this setup here, we have our breadth that we're looking for put to call ratio. And looking at the put to calls, you see spikes happen. You have this extreme bearish situation with the at around the 1. We have our just a normal situation. These are almost identical around the 65 or the 70, the 0.7. And then down here, the extreme bullish point, the extreme bull down here, you see. So what happens here is a lot of times you'll get these spikes. You'll get these major spikes. And that doesn't necessarily call the top if you're extreme bullish. That's a contrarian signal. And usually after the signal, when you start to move to the upside, that's when you start getting your top. When you cross back into normalization, then you notice that the put to call ratio starts to oscillate to the bearish end. And so now you're seeing the bearish price action take hold. So, when you get these spikes here, you get near a top, not necessarily the top. And when it normalizes, that's when you start to get your top. That's when you start getting more bearish. And then when you have your extreme moves to the upside, like this one, we were in this bearish territory for so long, got finally a last spike up here, an extreme bearish situation. And that was our contrarian indicator where we started to tank here and move to the downside. And now we have our spike. I just moved in a little closer. Now we had our spike. And just like the last move here, you have the spike and price action continues to go higher. You get to that extreme bull again. You have that pullback here. And it's when you start to normalize and head to the upside and oscillate back up into that bear territory is when you start to have your move. So I think we're getting near a top. According to this indicator, it should start to move to the upside and spend some time in this bear scenario as price action starts to head down. Okay, so this is our last set of indicators we're going to be looking at. Then I'll go over to the Elliott wave count so we can check out the structure and reiterate what we're looking at, what we're projecting from this structure that we've had so far. So we have the money flow index, just getting multiple divergences, very similar to the top here, a big, deep, and then have one more move to the upside, big, deep move, and that was a divergence, and then started heading down from there. Now we're extreme, just like the other one. Get to that extreme point, sometimes you just start heading down from there. We had a little divergence here as well, if you notice that, and then started moving down. This one, we're getting a lot of divergence. Can we get a new high in price? Yes. And make another divergence? Yes. But this is starting to signal to us that a reversal is coming. The volume profile, all this is telling us is we're past our standard deviation move here from the point of control. That's where we had our reversal off of here. We caught that reversal. Unfortunately, we got a little too bearish after this move, and we started to scale into bearish moves, but this move kept taking off on us. Yes, we were wrong. We did have our secondary situation where we thought we were going to get a new high here, but I was skeptical, and I still am. I don't think our high is going to be in. I've said that many videos. I don't think we're getting a new high in the SPY. It didn't matter to me if we got one in the NASDAQ. I said that it doesn't change anything. It only confirms that we're likely to get an ABC rather than this being a 1-2 setup. All right, so we're in the standard deviation, past the standard deviation move. We're likely going to see, when we get our reversal, a move at minimum here to about the 460 area, but we'll be looking for these nodes in the future and these gaps for much heavier moves to these gap fills. Now, trend is something new that I put up here. This is something that you have to interpret as well. So on these trend indicators, you have your extreme bullish situations, where the red line is. That's contrarian. When we start getting down below there, that's when we have to start looking for reversal. And you have extreme bearish, extreme bullish. You get spikes in the bearish, then you get a reversal. We're looking for some sort of indication. I was trying to draw that in to see if we were going to get it. Some sort of indication that this bullish move, that we're extreme bullish. We got a spike here into that area. We're starting to head back into it now. And with this comparison with the NASDAQ, we already had that move down here. We're actually starting to normalize right now. So this could be an indication that we are getting our reversal in. It's very hard to interpret, but when we get that spike down to the bullish territory, usually that indicates fairly soon that you're going to get some sort of reversal coming up. Very similar to the put to call ratio. But it's a method that you have to interpret. So it takes some interpretation. It's not a clear indicator saying, oh, we spiked. We're extreme bearish. We spiked here. We're heading lower. But you see as it normalizes, so does, we got extreme bearish here. Then we had a bottom. And quickly, as price barely moved up and reversed, we got another extreme situation. And you can't be bearish when the price action spikes like this. When trend spikes like this, you can't be bearish. So we're going to look on this bullish end. You get down to these real bullish areas, extreme bullish right here, calling that top. You can't be bullish anymore. It's just very, very risky. And so let's go ahead and look at this cumulative volume, not confirming this next move. So we were looking at this yesterday. We did not have a divergence there, but now we made a new high and created a divergence in this cumulative volume index. So that's what we look for, these divergences. We have them all over the place. This matters. We're looking for the reversal. I think it's imminent. I think it is coming really, really soon. So let's get out of this setup. Okay, now we can view this. This is our top situation where our top is in here. We have our initial correction, an ABC correction for an A, or if you want to call it 5, that's fine. I don't think this is zigzag anymore, so I'm counting this as an A, B, C for our A, an A, B, C for our wave B. NASDAQ made a slight new high, which doesn't change anything. The B is just a little bit higher. And then our wave C, which could be, where I was showing that channel, could be just a little bit lower here, but we should be seeing in the blue here, 1, 2, 3, 4, 5 wave move to in the C. And we'll have to look at some projections and things like that for targets down there, but we'll be looking for the reversal. And then after that, I think we still make a lower high. I think this is the beginning of our correction. This is the end of our initial correction, ABC, but I think this will be a larger degree A. I think we'll be looking for, first of all, a C to complete this this 3-wave move. And then I think that will just be an initial A. We'll make this purple and a little bit larger. So this will be a larger degree A. This is just the beginning. ABC for the A, and then I think we get a nice large correction, perhaps 50%. And what's going to happen is over time, over this, when this is all said and done, and we correct back here, really, it's just going to say, hey, we've been in this huge range, and now we're correcting. We're in this range for years. This took 2 years for this move, and we've gone nowhere, right? Very volatile, but gone nowhere. And after we get this move down here for the C and get a correction, nice deep correction, we're going to say, man, 3 years, 4 years, we've gone nowhere. So after that correction, then I think we have a larger degree A. We'll come up for a B somewhere, and we'll have our C 5-wave down, which will be pretty devastating at that point, but will be considered a sideways moving market until we really get into that last wave C that should wash out. Man, it's not going to be pretty. I don't look forward to. I'm a trader, so I look forward to the volatility. But I don't look forward to people losing their jobs and the market being torn up and devastated that way. But that's our market structure. That's what we're really looking at here. And now we're going to go around the horn with SPY, QQQ, IWM, and DIA and the 65-minute. See if we can learn something a little bit more. So let's start off with actually SPX. And I like to use all of these different SPX, ES. I haven't done ES in a while because it's really shaking us around. But we have this flag that we broke out of on SPX. Continue to move. We had a measured move. I had that on here. I actually took it off, and we exceeded the measured move by about 40 points to this high here. And then I was looking for a reversal there. We got a slight reversal pullback, but we weren't sure if this was a 1-2 setup here. That 1-2 setup is you have your wave 4 through here. So that kind of balances out this move here. And that's what I was looking at structure-wise. We have a wedge heading up here, and we're at the top of the wedge here again. But once we balanced out this move here and we started going higher, it became apparent that this was the wave 4 against this wave 2. So now we have, after that pullback, that ABC pullback, now we have a 1, 2, 3, 4, and a 5-wave move up. So even if we get up to this options expected move, we have a few points to the upside. That will be another spot where I'll put on some more short positions, but we're already short, and looks like the structure is just about complete before we start heading lower. We'll be looking for a bounce, certainly in this flag type breakout area for back test. So you'll see my green box here again. That's also the 60 to about 80% retracement as well. So I do think this is the zone. The 50% we're going to take a little bit off the table. That should be right around that 44.23 area. Will be taken off a little bit off the table, but it's really this 62% that we're going to take more off. But price action certainly can get down to the 42 area, and this should be a 5-wave move structure to the downside, and we'll be looking for a pullback at that point. 5-wave move, pullback, and then head lower. Now, if you notice, we have this counted up as 1, 2, 3, 4, and now we have 1, 2, 3, 4, and 5 completed here. This 100%, we can't exceed that. So I don't expect price action to make new highs, especially if this count is correct, because our extension is in wave 1. Wave 1 is already longer than wave 3. So now wave 3 from the bottom of wave 5, the 100% is right here at 47.80. So we can 47.81 approximately. So we cannot exceed that, or else it invalidates this count and something else is going on. So at this point, 1, 2, 3, 4, 5, we're really, really close to it. I think this is going to end. I think this is going to end very soon. All right, that's more evidence why I think that this move is just about over. So looking on SPY in just a little bit different point of view, we have our 65-minute. It looks more of a wedge that we have here instead of that flag. So this is another way to look at it, that this 62% down to the 78 is still very valid. We can get a deep pullback, and we have this trend line, this potential trend line right underneath there to where we could pull back into and test that trend line out, probably get our bounce that we talk about, and then head lower. So we've been looking for a turn. That has been the problem. We keep saying the same thing. This is now an impulse move. We think we're done with that. We're going to get a deep retracement. It's going to pull back possibly to the 62,786 and then get a nice bounce there. And I think we'll sell into the bounce and start heading much lower. Let's go to QQQ. Now, this perspective of QQQ, we have a pivot here that we broke down from, retested it again, broke down from it. It's more of a sideways situation. Now we're hitting it again. We're in divergence, and look at this. Right as we're talking, we're starting to crack the uptrend line. This is a steep uptrend line. We're starting to break it. I think that we're going to get our reversal going into tomorrow. I think this move is done. We can stretch this out for a main trend line. We're at minimum going to test down here, I think, going into the end of the week, possibly even with the catalyst with GDP and things like that. Maybe we had much lower, much faster. All right. So looking at IWM. IWM had its huge move. We were going to show, I was going to make a video. I might as well show you right now. I was going to make a video just to give you the same clue on what I think is happening. And, well, first of all, we're in this channel. Yes, we are exceeding the channel a bit, just like that. It's more of a zone, but we have the Elliott wave situation. I didn't even update the letters here. So what we have is we had our initial move down for an A, just like the regular market now. Now it seems to fit exactly with the market. So you had your bottom here for that initial ABC for an A, a larger degree A, a lower degree A. And now we have our complex situation where we have an ABC going into our correction A, an ABC down for B, and our 5-wave impulse move to end here above A. That's the important part. So we have a flat pattern into a C. Now that is just a larger degree. This fits perfect, you guys. That's a larger degree A. And we made the other one purple, so we'll adjust these. And so we just completed our wave B. Right up here, we're completing B on a larger degree. And just like the rest of the market, how pretty is that? Now we start selling off for that 5-wave impulse move for a C. And so that's going to head much lower. This is not the price. This is not the price level that I'm looking at. This is a placeholder. So we'll be looking for much lower prices than an ABC. All right. So that's how we're looking at that. And on DIA, that's the Dow. We continue to creep up. We're looking at 65. We're almost to the expected move. And again, this is forming a wedge. But we'll be looking to see if we start breaking down from this major trend line right here. So not a sell signal here yet. Looks like we had our corrective move and possibly a 1, 2, 3, 4, 5. It doesn't really look, it looks like this might be a triangle. And then we have a 1, 2, 3, 4, maybe one more little move to the upside. All right, so either way we go, we're looking towards the end here. We can pull up a couple indicators on this time frame, on the 65 that we're exploring. You have that reversal look here. We have divergences all over the place. It just made a new divergence again as we get these new highs. Divergence, divergence, divergence. We're getting divergence on the reversal indicator here with the Williams percent R. On the MACD, reversals or divergences all over the place, over and over. We're starting to cross back over right now. So we got to be careful if you're long here. This is not a place to get long. Our awesome oscillator, we have finally today another negative divergence. So we get that divergence again. Divergences everywhere. The DMARC, I don't think we have a sequence going on here that shows exhaustion yet. We had our 13. Yeah, we're at another 9. We had 9, 13, and 9 here. So we're certainly in the exhausted area all over the place. Like I said, you guys, the indicators are all saying that we're reversing just imminently. And so we have our same thing with our regular indicators with the slow still with the slight negative divergence. And we're looking to try to cross right now for a sell signal here past the 80. All right, so that's all I have for you. I know this was a long video, but super important information showing divergences everywhere. We can even check out the VIX. We've been eyeing the VIX. It's been stuck in a place, and it already broke out from its wedge, but it's just now starting to kind of lift. We're looking at it's a very tight situation. Last time that we got price action tight, not as tight as this, we broke down from it. So will we break down and back test the wedge, or are we going to start heading up? I think we start heading up. If we get one more back test down there, that means that the price action on the market is going just a little bit bullish again. We get another divergence and we head to the upside. So I do think this starts to move. I think we're in that complacency point. We got down to 12. We talked about it in past videos, extreme complacency, and we're bouncing off of it. I think a lot of people are looking at us to back test this wedge and head lower, which would be bullish for the market. So that's the kind of optics I have right here. But if you go to the daily time frame, it's more of a bearish optic that I have here. We have a channel headed down here. We had the wedge breakdown for our last move into complacency at the 12. And then I think we break out from this channel. We break out from the channel and we head much higher. We probably break these 30s. And as a matter of fact, I think we would probably start testing these highs up here. So we're just about at the end of the bell here. I got to go pick up my middle child anyway. So got to go. Thanks for joining us here at Options Center. Have a wonderful day. We will talk to you soon.